Number one, the 2017 tax cuts are now permanent. Number two, the child tax credit has now increased. Number three, claiming donations or charitable donations for standard deduction filers. Number four, a higher standard deduction credit. Number five, the state and local tax deduction or SALT. Number six, the auto loan interest deduction. Number seven, tax-free tips and overtime pay. Number eight, estate and gift tax exemptions are now doubled. Nine, electric vehicle car credits are ending soon. And number 10, the remittance tax.
Hi everyone, I'm here with Jason Stoch from Uptrend Advisory. G'day, Jason.
Hey Josh, thanks for having me.
Thank you for jumping on. We're going to talk all about the big beautiful bill, putting aside all of the politics, all of the big picture stuff that this bill has in it. What we want to talk about today is what might impact Aussies and expats and those of us living on the ground that want to know how it's going to affect us day to day. So, do you want to jump in with your list of the top 10 things that you've seen in the big beautiful bill?
Absolutely. So strictly from a tax perspective, most Australians living in the US are going to benefit from these changes. The first one is that the 2017 tax cuts are now permanent, and this is a positive outcome for taxpayers as it ensures that the tax brackets remain the same instead of reverting to the previously higher tax brackets, which means more money in taxpayers' pockets. Next one is the child tax credit has been increased a little bit. It's a few $100s more each year compared to prior. Another big one is that for people that are claiming the standard deduction, you used to only be able to claim the standard deduction. Now moving forward, you'll be able to claim up to $1,000 of donations if you're single or $2,000 if you're married filing jointly. Additionally, the standard deduction is going up a few $100s more in 2025 compared to what it was meant to be. The next big one is something called the SALT, the state and local tax deduction. This was previously capped at $10,000, which caused a lot of taxpayers to claim the standard deduction. But now this has been increased to $40,000, which is going to dramatically benefit taxpayers living in higher taxing states such as New York or California.
Always comes up.
Yeah, it does start phasing out when you earn over $500,000.
Start the countdown.
A big one as well is if you have a new car loan from this year, you may be able to deduct $10,000 of interest depending on how much money you make. The other one is tips and overtime pay, depending on your income levels as well. Some of it is now tax-free. A big one for Australians with future tax planning and succession and going back to Australia or staying in the US is the whole estate and gift tax exemptions. That was meant to sunset and revert back to 7 million from currently where it's at, which is 14 million. Now it's going to increase to 15 million. The electric car credits are going to be ending sooner than planned. It was meant to end in 2032, but now it's ending September 30, 2025. And the last one that we're still investigating is the whole remittance tax and how it may affect Australians. It's a 1% tax and certain types of transactions are excluded, and we're just determining exactly what those exclusions are.
And I think it's a good way to end because there are a lot of things in it that we still don't exactly know how they're going to pan out, but this has been a good top line. And as always, it's important to note that this isn't personal advice, and it's important to speak to your tax provider, your accountant, your lawyer about what's going on and getting individual advice. Jason Stoch from Uptrend Advisory. Thank you, mate. Really appreciate it.
My pleasure, Josh. Thank you.